Ja, hallo zusammen. Danke fürs Kommen. I'll switch to English, yeah, because we have a guest speaker today. It's a very famous speaker. It's a friend of myself, and it's tone-based. It's a very popular speaker and Bitcoin specialist. Good known as Bitcoin maximalist.
Okay. Do we need it? I can talk pretty loud. I might not need the mic.
And we are happy to get Ton here today. Yeah, as you can see, our community is growing very fast here in Stuttgart. We need a bigger room, as you can see here, and we'd like to get a bigger room today. Thank you, Frank, from KI Group, to provide the possibility to be here today. And we were able to get a small sponsoring from Frank as well. The drinks you see there on the table, it's all for you. Please take and enjoy it. I don't like. Next to your mouth. Yeah, I don't like to waste your time anymore. But I see faces here I saw in New York on Consensus. Mai this year. Did you come from New York especially to see to join the meeting today? Oh, cool. Tom.
Yes.
I would give it to you.
All right, thank you. I'm trying to set up the live stream to make sure. I think the speaker's going in and out. I'm gonna go without a speaker. I'll just talk loud. That's not a problem for me. All right, I think we're ready to go here. All right, yeah, we'll need that.
Okay.
So let's see. All right, guys, thank you very much for coming out. Everybody can hear me okay. Yeah, it's not that big of a room. I don't need a microphone. Thank you very much for coming out. This is now my third city in Germany, and it's great. I'm having a really good time. Started in Essen, and then was in Cologne yesterday, and now here in Stuttgart. And how many of you here are familiar with Bitcoin? Excellent. Anybody here, this is their first meetup? Oh, a few. Awesome. And how many people here have at least some money in Bitcoin? All right, great. And any of you have been in it more than 3 years, 4 years? Okay, few. Excellent. So this is a Bitcoin-focused presentation, and I'm gonna go over the kind of the history of Bitcoin, how we got here, and why it's important. Okay, and I started out working on Wall Street. I worked at Bear Stearns during the housing collapse when the company went under. I then ended up at JP Morgan, worked at a few other companies as well. My background is in risk analysis, but I've always really liked trading, and I was doing trading as a hobby, so that's what I had a lot of fun doing. Everybody can see the slides, right? And so when I came to the crypto space, that's kind of when I started writing about trading, and that kind of took off. Now I do videos and content, not much time for trading these days. I started a podcast called Crypto Scam. It was starting to get very popular, but then once again, I got a little bit busy. It was hard to keep up, and I took a skeptical look at a lot of the projects, including Bitcoin. I was pretty skeptical of Bitcoin as well in the beginning, and then even during the podcast. You can also find me on the World Crypto Network. We stream a lot of videos there on the World Crypto Network as well. Hope that. Here. Yes, closer. Okay. And so you can find me on the World Crypto Network as well as my own YouTube channel. All right, let's get on with the presentation. Why isn't my clicker? There we go. Now it's working. Sorry. was on a minor delay. Okay. Why are we having technical difficulties? Oh no.
It's a Chinese.
It's
We
moving.
have another clicker. We can try another one.
No, I mean like clickers. There we go. Okay, I don't know what the glitch was, but now it seems to be working. All right, here we go. So what you see here is the entire history of Bitcoin, though the bottom corner seems to be missing, but that's okay. So this is the entire history of Bitcoin from about 10 cents all the way up to a recent high of the $5,000. Okay, and we're gonna go through all of it, but in the beginning, I like to start with even pre-Bitcoin, and maybe we'll try another clicker. I don't know what is going on.
You have to let me through. That through.
Ah, oh wow. It was working yesterday. Out of connected. There we go. Okay, perfect. I worked now. So I like to start even before Bitcoin came around. And I want to take you guys back to 1998, where a Nobel Prize winning economist had something very interesting to say about the internet when he was asked, well, what do you think the internet would do and where is it going to go in the future? And he said that by 2005, the internet would not have much bigger impact than a fax machine. So that was pretty much Paul Krugman's view on the internet. He didn't think it would amount to much. But another economist around the same time had something very different to say. We're switching. Wow. Better. Another economist had something different to say, and I don't have sound integrated, so I will play it off of my phone, but you guys should be able to hear it on speaker. This is what Milton Friedman had to say about the internet in the early days.
So that I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill and hand it over to you, and there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will make it even easier for people to use the internet. Of course, it has its negative side. It means that the gangsters, the people who are engaged in illegal transactions will also have an easier way to carry on their business.
All right, everybody hear that? So, people want to find this. So basically, Milton Friedman said that internet will not achieve its ultimate goal unless internet has a real cash component. So basically, a method where one person can send another person money, and they have no idea who they are, they don't know where the money came from, but you can do it over the internet without knowing each other. And that's what Bitcoin really was. But in the beginning, people weren't sure. So in the beginning, it didn't really have a price. Bitcoin spent about a year and a half as just an interesting science project without much else there. Until at the very end of 2010, there was a suggestion made by Amir Taki that WikiLeaks should accept Bitcoin for donations. The reason why he did that was because WikiLeaks got cut off from the financial markets. Visa, MasterCard, PayPal, they all cut off WikiLeaks in 2010. And they wanted to come up with a way, okay, so how do we keep the lights on? How do we keep the servers going? And Satoshi came out and said, no, it's too early. Bitcoin is not ready for it yet. We shouldn't, they shouldn't accept Bitcoin yet. We also don't want this kind of attention. And in the beginning, they listened and they didn't accept it right away. But then a little bit later in 2011, Bitcoin price started seriously going up from $1 all the way to $30. And at the very end of this run, there was a very interesting situation in New York. So this is the Senator Chuck Schumer from the state of New York, and he went on TV for about 2 to 3 minutes, raving about this crazy website called Silk Road and how people are just buying drugs on the internet and they're using this browser called Tor, and then they have to pay for it in Bitcoin. It was like a crazy 3-minute tutorial about Bitcoin and how to buy drugs on the internet. Probably better than I could have done if I was given 3 minutes on TV. But that's pretty much what Chuck Schumer did. This is in 2011, and he really put Silk Road on the map. You see that it's on that computer right there. There's a video of this if you do want to Google it. It's just not on YouTube. That's why I couldn't embed it in the presentation. And that really helped drive the price of Bitcoin to that $30,000 price. And then we had our very first bubble when the price of Bitcoin crashed from $30 all the way down to $2. And WikiLeaks started accepting Bitcoin kind of at the very end of that run. WikiLeaks started accepting it as well. But at the time, Silk Road and other drug markets were the most popular use case because there really wasn't anywhere else you can use Bitcoin for payments on the internet. Now we come to 2012. In 2012, during the summer, there was a very interesting situation in China where Bitcoin was shown on CCTV, where that is watched by about 500 million Chinese. So about 500 million Chinese watched that channel, and they did a little expose on Bitcoin. And that's when it really started to be taken off in China. This is also when the Chinese exchanges started to pop up as well. Prior to that, we only had one exchange, Mt. Gox. Now we come to 2013. Lots of things happened in 2013. Some of them we only know in hindsight what happened. So in hindsight, the Japanese exchange Mt. Gox was actually running a fractional reserve. For some reason, they thought they would be able to replenish the price, the Bitcoin that they were missing, if the price of Bitcoin was higher. I'm still not sure why that is. They should have been trying to keep the price low so they can buy some. But they were running a Willy bot that was fake trading, and that significantly helped the rise in the price of Bitcoin. Also, during this stretch, there was a very interesting incident in March of 2013. I'm sure you guys here remember it even better than me. That situation was in Europe, and more specifically, it was Cyprus. Okay, so in Cyprus, the banks just shut down. It was a bank holiday. On Monday, the banks didn't open. And the initial report was they wanted to confiscate 6.75% from everyone. And if you had over 100,000 euros, they would confiscate only 10%. If you had that much. There was a big outcry internationally. So what ended up happening was all accounts with over 100,000 euros were taxed at 47.5%. Okay, so half the money above 100,000, if you had it in the Cyprus banks, the government kind of just took it. So this is the time where I was really into the whole, like the libertarian movement and the Ron Paul movement over in the US running for president. So this situation really bothered me. And this is when I finally started buying Bitcoin. And I remember people at my office when I was saying, guys, aren't you worried? Like, this can happen in any first world country. This can happen anywhere in Europe. This can happen in the US. And they're all laughing at me. No, this can't happen here. It's just Cyprus, considering Cyprus is on the euro and in the European Union. And of course, I'm buying right here on this bubble right into 250. And I'm supposed to be the professional. And boom, I'm watching it fall down to 50 bucks. So all of a sudden, after I buy some Bitcoin, I'm like, oh, wow, I just lost half my money because the price just fell. So that was interesting. And then I waited the rest of the year in order to get some of that back. But so that was pretty much my story of how I got into Bitcoin. And the year was somewhat stable. We hung around in that 70 to 120 range. And then right there, you see that little drop to 85 bucks? So right here, the price on one day fell from 120 down to $85. It fell like 40 or 50% in one day. Anyone remember what happened on October 1st, 2013? Come on, some of you have been in Bitcoin for 3 years. Silk Road. Silk Road got shut down by the feds and Ross Ulbricht got arrested. And I remember this day. It was very interesting. I mean, I still never been on any of those websites. I'm actually kind of curious what they look like, but I don't know how. My IP spoofing isn't very good, so I kind of try to stay away from it anyway. And I remember one of my coworkers came up to me that day at work, and he's like, haha, Silk Road got shut down. What are you going to do with your Bitcoin now? Because, again, I'm working at a financial institution. Everyone's a PhD. Everyone's a financial expert. And they're all just laughing at Bitcoin. They think it's completely silly. And I'm the only one there that really, really believes it. All right. So also in 2013, we had this giant run-up. Right after Silk Road goes down, everyone thinks it's going to go to zero. But instead, it goes all the way to $1,000. Yes, the Willy bot from Mt. Gox had something to do with it. But also, there were Senate hearings in New York where the senators seemed to be really having a curious look at Bitcoin, and they were treating it almost like the internet, like saying, hey, should we regulate it? Should we wait and see? And it looked very, very positive for Bitcoin, and that seriously helped drive the price. But at that time, the US exchanges were all being shut down the way the Chinese exchanges are being shut down now. But China is picking up all of the volume, and the Japanese exchange Mt. Gox is going under right at the top of this bubble. So right up there, the Japanese exchange Mt. Gox collapsed. A lot of people lost their money. People are still waiting for that legal case in order to get their money. So this was basically the run-up in price. Now let's talk about what's happening on the way down. So when Bitcoin starts to go down, like any bubble, they generally follow the same exact path when they start to go down. It's the typical, bubble path. You have it right here in the corner, right there. So it's this typical bubble path, and then it drops, and then you think it's coming back, and then it seriously drops. Okay, we've all seen it. And the big question is, so where is Bitcoin on this chart? Where is it? And the best answer always is it's somewhere over here. We haven't really seen the mania phase yet. That seems to have been the answer that always seems to have worked up to this point. But prices do go up and down. We just had a 40% Bitcoin price correction in 2 weeks. From September 1st to September 15th, we fell about 40%. We've now recovered half of that, and I'm hoping by end of the month, we're going to recover the other half. But right here in blue is the same Bitcoin, only now it's a linear scale. It only goes up to about 1,000. Otherwise, this would be like somewhere over there. And I wanted to maintain the proportions of this chart. And this is just how bubbles collapse. There is a backdrop asset in this picture, and it goes from about $10 to about 50 US, 10 US to 50 US, and it had a peak in 2011. Anybody want to take a guess what that asset is? Not oil, not gold, only went to 50.
Silver.
Silver, close to gold. And this is silver. And they didn't fall at the same rate, but it's very interesting how they both fell in the same exact way. You had this initial pop, followed by a pretty big drop, followed by a quick move to the upside. Then it falls, goes back up right there, falls again, creates this base right here. Then it falls again, making an obvious base, goes back up, falls, makes a lower low, and then this final deep low called capitulation. So this is what we call capitulation. You see it right there in silver, and you see it right there in Bitcoin. Okay, and now Bitcoin started leading around 2016 when Bitcoin reversed first, and silver has been reversing slowly as well. So it's very interesting how they're pretty correlated. If you only Bitcoin is just moves 3 times faster than silver, which also makes sense because Bitcoin is a digital asset, that silver is a little harder to move and store. So when we were going down for an entire year, probably more like a year and a half, we were going down. Everyone was just talking, you know, why is it happening? Bitcoin is supposed to go up. What happens? And we know what the general economics 101 is, right? You can't see the word here, but it's demand versus supply creates a price. But in Bitcoin, what is supply and what is demand? So mined coins is simple. We know that 80% of Bitcoin is still has already been mined. 20% of Bitcoin still needs to be mined. We have these giant computer farms, and the mining rate is very predictable and known. But what is unknown is the supply coming in from merchants accepting Bitcoin as payment. A lot of people want more and more merchants to accept Bitcoin as payment, but they don't realize that in most cases, that's going to contribute to supply of Bitcoin. Because most merchants that accept it immediately sell it for their local fiat currency. They don't hold on to the Bitcoin. If a merchant takes the Bitcoin, instantly sells it, it puts selling pressure on the Bitcoin, and you need new buyers, new users of Bitcoin coming in to pick that up. So in the early 2014 days, we had all these debates. There was a big debate that I was involved in. People were saying PayPal should integrate Bitcoin. And I was screaming, that would be a terrible idea. Imagine if everyone that accepts PayPal accepts Bitcoin, but the merchant has no idea they're accepting Bitcoin. And PayPal just instantly starts selling all these Bitcoin that people are using. So I wasn't really for that. You want the demand for Bitcoin and merchants selling that Bitcoin for fiat to kind of be rising at a similar rate. When too many people are interested in Bitcoin come in, Bitcoin price goes way up. But then if all of a sudden the country of Japan starts accepting Bitcoin like they recently did, it's a good thing not too many people in Japan have Bitcoin to spend. But if they did, then the price of Bitcoin would probably slowly start to come down, because if everyone that has a lot of Bitcoin now has infinite amount of places to spend it, they would put selling pressure onto Bitcoin. But lately we seem to be doing pretty good as far as interest in Bitcoin and merchant adoption. But merchant adoption is difficult, and I'm on, let's skip that one. But merchant adoption is a bit difficult because you have to train your employees, you have to train your staff, and not a lot of people come in to use Bitcoin. Now let's talk about demand, okay? So Bitcoin demand is interesting, and I talked about, just randomly, I was in a group chat, and I was talking about all of the use cases of Bitcoin, And next thing I know, there was a Cointelegraph article that came out basically about the group chat. So I also wrote my own to kind of clarify. And I went through all of the general reasons. You can't really see the first one. It's getting cut off on the projector here, but that's okay. Yeah, maybe I can fix that. Can I fix it? Not sure why the bar is there. Anyway, that's okay. We'll leave it as is. It's fine. Oh.
Like this?
No, it's fine. It was okay.
It's not the projector that cuts it off.
Then that's probably needed. Okay. Oh yeah, it's the bar. It just wasn't there before. That's fine. So all these uses. Okay.
Back.
Sure. No, you can leave it. Yeah, this is better actually. No, the other one was. Yeah, this is a little better. I don't have a bar there, but still a little better because the bottom is now visible. Okay, so talked about all these uses, and I've already talked about some of them. The first one is donations to organizations that governments don't really like WikiLeaks. Then we have purchasing goods that governments don't really like people purchasing, which is things like Silk Road. Also gambling. This is something that interested me. Being in New York, being a U.S. resident, you really can't gamble on the internet. I wanted to play some bets on football, and Bitcoin came in really handy. Of course, purchasing services the government doesn't like. Europe is a little bit more open than places like the U.S. or some others. I think most of your cities have like red light districts, but in other countries, things you have to find other means. And Bitcoin is this censorship-resistant value transfer. And when governments start putting laws on people's voluntary contracts, a lot of problems get created, and these services and goods, they don't go away. They just go into the black market. And they're still going to get done. They're not going to stop it, which is why societies that police voluntary transactions less tend to have a lot more freedom. But on the internet, there was never a way to have freedom for payments. And now the internet is opening up all these things in that regard. Over here at number 6, I have hiding assets from the government. And this generally refers to taxes. Again, it depends on your jurisdiction. I was in Switzerland earlier. They have these zones like Zug and others where taxes are incredibly cheap. Me as a U.S. resident, if I decide to move to Puerto Rico, I can pay no taxes. So if I'm in Puerto Rico and I'm paying no taxes anyway, this is not a use case. But in some cases it is, because you want your countries to compete on the lowest possible taxes. I never understood the concept of value-added tax. I'm not sure what value is being added to any good or service by putting a tax on it, because then the people are just paying it and it moves along. It's really the craziest thing to name. Now, the one I want to focus on in this presentation is transferring value cross-border. This has been something that gold has been doing for thousands of years, but no more. And I'll talk a little more about that in a few minutes. But I think that Bitcoin's most useful tool in the future is going to be this cross-border value transfer. I always say that there are two most important properties of Bitcoin. One is it's the first asset the world has ever had that is unconfiscatable. Because you can memorize your password and no one else knows it. No company, no wallet in your cell phone, nothing. The password is in your head. I've actually utilized this feature. I've deleted all of my Bitcoin from my cell phone as I was on the way to the airport. So this way, there is no Bitcoin even connected to my cell phone. When I arrive where I'm going, I reinstall the application and I reinstall the Bitcoin on it. with the password in my head. So now you have value and money that is actually unconfiscatable from you. I think that's its most important property. The second most important property is the fact that it's censorship resistant, which means no one can stop you from sending a payment. Yes, they might be able to track you. Bitcoin isn't fully anonymous. Bitcoin isn't fully fungible. Bitcoin isn't instant. It's close, but it's not instant. And it's pretty cheap. It's not free, but it's pretty cheap. And some people really want Bitcoin to be the global currency to buy their coffee with it and anything, any little item. And to me, it needs to just stay unconfiscatable and censorship resistant. Every other property is a distant second. That's not revolutionary other than those two properties. So why does the transfer value cross-border property become so important? And this is where I talk about Europe. It's a lot easier to talk about Europe when you're not in Europe, but I'll do my best, as you all know. And the first time I ever gave this presentation was in Mexico in the very early 2015. And there is a video floating around the web somewhere where I say, yeah, so this summer, when the Greek banks fail, you're going to see why it's important for these properties of Bitcoin to exist. I was absolutely right about the Greek banks failing that summer of 2015. But ever since then, I've been saying, well, when Italian banks fail next. That one has managed to get avoided twice. I'm not sure how. I'm sure you guys heard stories, right? They came close. People were worried those banks were going to get shut down in Italy, but they avoided it somehow. But you know what? If it's not Italy, Spain and Portugal, their banking sector is also in a mess. And a lot of it has to do with the common currency, the euro. Okay, you guys are on it as well. So the euro has a couple of issues. So the euro was only, what, about 20 years old? When did it start? 91, 92? Somewhere around that time? 99, right? Okay, so let's say 2000 and 2017, right? So not even 20 years old, okay? And the idea of the euro was, well, the United States has one currency, and they merged together, and they started, and it worked. So there were two things that the US did when they created the US dollar, and they merged the states and they merged the colonies to create that dollar. They consolidated the debt, which is something Europe didn't do. The countries, Greece and Italy, the debt wasn't consolidated into federal European debt. That's one issue that's still a major problem that's causing major issues in the currency. The other issue is that the US had a common language, and it was very easy for people to communicate. And that's not the case here in Europe. And a common language goes a long way. Again, I was in Switzerland, where it's interesting, where everyone speaks French and German. They don't have their own language, but they manage to learn each other's languages. That generally isn't the case. I don't know how many people in this room speak French. It's a neighboring country. It's a decent size. But again, and Italian and Greek and other countries, right? So that's one of the issues. And these two issues are going to weigh heavy on the euro. And I honestly don't think it's going to last another decade. It's going to break up the currency, and you're going to go back to your own national currencies. Now, for you guys in Germany, you really need to keep the euro together, because if you go to your own currency, it's going to be everything becomes very, very expensive. Because other countries would inflate and yours would hit deflation pretty bad, just like Switzerland, when they lost their peg against the euro and the price of the Swiss franc just went through the roof. And it's going to be very, very interesting situations if that happens. Okay, so when there are issues politically and economically, people tend to just get up and leave, okay? I remember reading how when France decided to raise the taxes on the rich to 80%, some of their famous rich people like Gerard Depardieu left for Russia in order to avoid the tax. I doubt he stayed there all that long. But so people just get up and they leave to other jurisdictions. And it's interesting how, you know, the UK had their referendum to leave the European Union, which I sort of agree with, because you want to make your own laws. The UK didn't want to, you know, let the European Union make laws for them. Their own politicians wanted to make the laws, which is kind of what you want in your country, unless your country really, really merges. So what are some of the other reasons that people decide to get up and move? So I am from the US, so my presentation might be a little bit US centric, but I loved it when Airbnb first came out. Are you going here? Do you have Airbnb around here? People use it? A few. Oh, excellent. So I like to travel a lot. I was using Airbnb from the very beginning. It was so much cheaper than hotels. It was fun. You get to meet people. But then around 2015, I'm booking a room and I have an idea how much it's going to cost me. And all of a sudden, I'm like, wait a minute, why does this feel 20, 25% more expensive? And all of a sudden, all these taxes showed up that weren't there the previous time I used Airbnb. And my price literally went up by about 20% because of all these taxes. This happened to be in North Carolina. Another interesting thing happened when I was booking that room. And I saw the terms and conditions on Airbnb. How many of you here actually read your terms and conditions? I had one guy raise his hand once, and I asked him, how did you make it to the meetup? Because then that's what you would be doing all day. So the scroll bar on a terms and conditions was very, very small. So what I did was I just grabbed, okay, let me see this. So I did Control-A, Control-C, Control-V. If you're on a Mac, different buttons. And I pasted it into Microsoft Word, and then I'm just watching this little counter going. I'm like, wow, is it really counting the words that long? And after about 40 seconds, it comes back with 33,000 words in this document, 55 pages long for Airbnb's terms and conditions. Something I've been using since like day one, and it's incredibly simple. And then you start comparing it to some other famous documents like the U.S. Declaration of Independence at 1,300 words, or the U.S. Constitution that we kind of, sort of, generally still follow with all of its amendments at only 7,800 words. People are trying to debunk the EU regulation on the sale of cabbage being 27,000 words. I wouldn't be surprised, but maybe you guys have something different to say. And the Satoshi Nakamoto's white paper was only 3,400 words. So what happens is you start creating laws and documents that are just unreadable. Here's a real example. This is a U.S. senator on the floor of Congress trying to explain why a bill that got passed, no one was able to read it. Anybody want to take a guess what law this is that was passed? What piece of legislation in America? This was recent, a few years ago. Obamacare, yeah. So this is what Obamacare looks like, okay? If you print it out, it's 33,000 pages, okay? So when they say they passed a bill that nobody read, this is why. This is why they're able to say it. Other interesting laws got passed when Bitcoin first came out. New York passed something called a bit license. And it was very, very strict, where even me as a resident in New York, I should not be allowed to trade Bitcoin unless the company has registered with the bit license. So there's a company, I think they have an office in Berlin, Volturo. So they sell gold in exchange for Bitcoin. And their terms and conditions are simple. They just put a little disclaimer I confirm that I am not a resident of Iran, Syria, North Korea, or the state of New York in order to exchange your gold for Bitcoin. This was really great. So why else is Bitcoin important and why it's needed? So I used to talk about this, but it's great that I was able to find like an actual academic paper that explained it perfectly. This is from the Harvard Business Review, and it's an analysis on the elimination of cash. And they did a really good job. They talked about the 3 reasons why governments want to eliminate cash. And one of them is Switzerland did this first. The idea of negative interest rates. When you have cash, you're able to exit the financial system by taking your cash out of the bank. And that prevents governments from doing something crazy, like charging you money to keep your money at a bank for the bank to use your money for lending. That's what a negative interest rate is. So Germany, I believe, went slightly negative for like a minute, and then it didn't really last because people would just go and take out their euros. But this idea of negative interest rates is very difficult to implement with the existence of cash because people will run to the bank and take out the cash. What do you mean? I'm giving you my money, you're doing God knows what with it, and you're charging me for it. And people aren't really happy about that. So to be able to have a negative interest rate, you would need to eliminate cash. Also, a huge reason to eliminate cash is you can't have a bank run if there's no cash. Everyone in Greece used to line up at those ATM machines. Cyprus, same thing. I mean, all of those pictures would go into the history books if there was no cash. You don't have ATM machines if there's no cash. They're not necessary anymore, right? And you won't have these lines. I mean, the pictures from the Great Depression of people standing in line to take out, $5 are the same as the pictures in Greece, people trying to take out 20 euros, just that one's in black and white, one's in color. Other than that, the pictures are really identical. So you can't have a bank run. You don't have this visual panic of people running to the bank to take out their money. But the biggest reason why governments want to eliminate cash is because in the eyes of the government, we are all tax cheats, and that's why they haven't brought, this utopia to the world of peace and harmony, because all they need is a little more time and a lot more money in order to get it done. But it affects some countries. That's the top slide. It affects some countries more than others. In India, for example, the study estimates that 30 to 45% of government's GDP is not collected because of the economy that isn't paying any taxes in India. So that was really, really interesting. And that could be one of the reasons why India tried to eliminate their cash earlier this year or late last year. And it was a very crazy time because they're not exactly a digital credit card even society. So they really are a cash society. But they attempted to eliminate cash because of this, tax evasion problem. And if cash is eliminated, that would probably be the greatest thing for Bitcoin the world can ever do, because then people will run to Bitcoin, because then that becomes the only way to exit the economic system with Bitcoin. So they went on and did a couple of other really good analysis. In this chart, they evaluated how expensive it is for a country to maintain a cash economy. So Canada's in blue, which means the government is not spending a lot of money maintaining cash, which is mostly, stocking ATM machines, checking counterfeit bills, making sure that there is enough bills to go around. America is in the middle, and then look, everybody on the euro pretty much is in red. So that means that it's very expensive for the European governments to maintain a cash system. China and India are in red as well. And then they did an evaluation of how technologically ready countries are to eliminate that cash. And you can see right here in the upper corner, so countries that are on the left means that it's very cheap for them to maintain cash. Countries on the right means that it's expensive for them to maintain cash. So these countries would benefit the most from the elimination of cash. And using cash to cheat on your taxes also falls into it's expensive for the government because they're making less revenue. So countries on the right would benefit the most from the elimination of cash, but the countries at the top of the list right here are the ones that are actually technologically ready to eliminate that cash. So you can see Germany right there at the very top. So that means your economy is best suited to eliminate cash permanently. But India is all the way at the bottom, so they will benefit the most, but they are least technologically ready for the elimination of cash. I mean, more ready than Egypt, Nigeria, and Philippines, but not really all that technologically ready to eliminate cash. Yet they're the ones that are trying the hardest because of that, 30 to 45% of missing tax revenue. So if you can't just eliminate cash, you gotta make it more and more difficult for your citizens to use that cash. So this is France, and this is from 2015, where I believe they passed this law where if you're a French citizen or a European citizen even, you have to KYC on any purchases over 1,000 euros. So you can't just even buy a used car for 1,000 euros. You're supposed to provide identification, and that money needs to be registered and proven. So any euro transactions over 1,000 euros now have to be KYC is know your customer laws. A little more lenient for foreigners, and they also snuck in, cryptocurrencies like Bitcoin fall into that as well, but it's a little harder to police. Here's an example in the US, the state of Louisiana a little while ago, having problems finding this law recently. Maybe they kind of hit it because they realized how dumb it was. They decided to pass a law that you can't sell secondhand goods for cash. So if you wanted to sell your bicycle for $20, you have a little bit of a problem. You're supposed to take a check right here. A secondhand dealer shall not enter into any cash transaction in payment for the purchase of junk or used or secondhand property, right? So you can buy it with cash brand new from a store, but then you can't resell it for cash. So this is one of the laws that they passed locally. I don't think anyone really follows it. So Germany is interesting. Maybe someone can correct me, but as far as I know, this was published. You guys passed a law saying that any collectible items worth over 100 euros need to be somehow registered. So we're talking paintings, I don't know, maybe like a rare bottle of wine, collectible coins. So right here, this amendment not only aims to combating illicit traffic in cultural objects in Germany, but at limiting ways of funding of terror organizations that are more and more financed by illegal excavations at archaeological sites, as well as by illicit trade in cultural material. So, according to the government, terrorist organizations are going out, finding a bunch of archaeologists and digging through archaeological sites to finance their operations. Now, that sounds like the craziest thing I ever heard. And it makes absolutely no sense. But they go on. The law is applied retroactively, which is also amazing. Not a surprise. In section 32.3, it reverses the burden of proof. It reverses the burden of proof that it will assume the item is illegal if the date of exportation cannot be furnished or ascertained. ascertained. So here, value greater than 100 euros needs to be somehow documented with the government. So I'm not sure how your collectible market is going to survive going forward with laws like this. Now, it's interesting that Germany passed this law here, cultural value, checking all items for its cultural value in excess of 2,500 euros for its archaeological heritage, if greater than 100 euros. It's a little weird. There's translations there. And so basically what's really happening is the European governments, they know that the euro may not last and it may need to break up. And they are also worried that people will find ways to transfer valuable things out. This happened during World War II, World War I. You know, people would build like walls in their cellars and then hide the good wine behind it, art, kind of like, you know, to protect it in times of war. You want to put your money in something valuable and hide it. So Germany is certainly well aware of this. So they want to know exactly who's holding what. So who's hiding their value in precious items, and then you'll probably be taxed on those items, kind of like a value-added tax, right? You have something valuable, so you have to pay for it every year, kind of like property tax. You own a house, you don't really own the house. If you don't pay your property tax, government can take that house. Possibly with laws like this, the same thing goes for your, you know, 10,000 euro painting on the wall. You'd have to pay a tax on it every year based on the value of the painting in order to hold on to that painting. Okay, and the reason this happens is to prevent people from hiding money in valuable objects. So, all right, how we doing on time? I got like 10, 15 more minutes. Okay. All right. I know there's beers in the back. I don't want to keep you guys. It is Germany, and I believe it's Oktoberfest already. Still September. I learned this recently. I'm like, that doesn't really make sense, but okay. So when governments start to make overbearing laws and start to go after their citizens, what happens to the population of those countries? They generally move. So this is a chart of the population of Rome from Martin Armstrong, which is one of the only blogs I read. Well, lately I've been busy, but it's one of the only blogs on economics I recommend people read. It's great. So I took this chart from his blog where he talked about the population of Rome, which peaked at 1.5 million people in 400 AD. And then their system kind of collapsed. One of the reasons was that they had a really big public sector, a lot of government employees. But back in Rome, all of those government employees were mostly soldiers because they were policing the world. In today's first world countries, you guys, I don't think you guys have any real like soldiers abroad, right? You don't have a standing army in Germany, right?
We do.
You do? Okay. Excellent. Okay. But it's very small. Very small.
Yes.
Well, it's more compared to the U.S., but the U.S. Army is very small compared to what the Romans have. Like what, 30-40% of their citizens were in the army. In the U.S., the percentage of citizens in the army is very small. But the idea of government employees remains the same. Like back in Rome, all those soldiers were promised pensions and health care and all these promises, and the government wasn't able to deliver. So they kept devaluing the currency, putting in less silver, going back on those promises until the soldiers kind of come back to Rome and stop protecting Rome. And you have all these problems. Same thing with the first world and a lot of socialist governments. Everyone always complains about, oh, the U.S. federal debt is 20 trillion. My answer is, who cares? No one is coming to America to collect on the money we owe to somebody. They probably just printed it anyway. The problem is not the 20 trillion we owe somebody else. The problem is the 120 trillion in unfunded liabilities that we owe to our own citizens that work for the government. So when that check bounces, it'll be the firefighters and the teachers and the policemen and the medical doctors if they go to a socialist kind of system. All of that is paid for by the government. And if the government can't afford all of the promises and pensions and everything else they said they were going to do, those are the people that usually end up in the streets, kind of destroying your country from within. That's what you worry about. I like going to the Socialist Republic of Vietnam, a communist country. If the government check bounces in that country, no one would even know. So this is the irony, right? You have a country that's calling itself completely socialist and communist, but the people don't rely on the government in any way, shape, or form. Businesses are kind of booming there, and I don't see what will change there if the government went away. In the US, on the other hand, I don't want to be there if the government check bounced. I'd rather be in Vietnam when that happens. And when the population starts to fall, you see it come back just like any other bubble, and then it really collapses all the way down. So the bubble chart applies to pretty much everything. And anything can be in a bubble. And you usually don't realize you're in a bubble until it's like down here somewhere. Yep, that was a bubble. Thought it was going to last forever like tulips, but it didn't. The population bottomed at about 20,000 people, and then recently it went back up and made new highs. Oh, gotta keep an eye on my battery there. All right, so what happens? So government starts to put, this is where gold comes in. So in the past, people would just, convert their value into gold and leave. But today, the government has metal detectors. This makes gold as a cross-border value transfer nowhere near as useful as it has been the previous thousands of years. And Bitcoin will fill that role because, like I said earlier, you can just delete your Bitcoin and recreate them from a password in your head that nobody else knows. And this is a customs card where they specifically ask you not only if you have gold on you, but how much gold jewelry you're actually wearing. They also question your type of phone, which is interesting. And here's a real life example. There are two articles from TechCrunch. So one was a few months before the Greek crisis, and it says why Greece should not switch to Bitcoin. And right here it says Bitcoin provider Qubit aims to help Greeks move their money, because this article came out right after the Greek banking crisis. Okay, so I will conclude this presentation with my views on the price of Bitcoin. How many of you follow my videos or follow me on Twitter? Oh, very few. All right, excellent. So that's good. No, it's a good thing. It's a good thing. I get to pick up a lot of followers there. So I mostly write articles and do videos about economics and the price of Bitcoin. I'm a trader. I've been trading for 10 to 12 years now, with traditional assets, of course. And some analysis is price-based and some analysis is time-based. So on August 31st of 2014, I wrote an article doing a time analysis with the help of my favorite economist that I read, Martin Armstrong, and I tried to apply some of his cycle theories on assets. And I applied a time analysis to pick out some key dates in the future of Bitcoin that are going to be very important to the life cycle of the Bitcoin ecosystem. And the two dates that I got were June 2015 and August of this year, 2017. Specifically, this was around June 16th, and this was August 14th. And in this article I published, well, something very interesting is going to happen here that will probably reverse the price of Bitcoin. And something really big is going to happen here. And I've been talking about this last month, or August 14th, 2017 date for the last few years at similar presentations and all these things. I said, I have no idea what's coming on August 14th, but it's going to be huge. So what happened back in June, I was close. I was within a week or two off. This is when the Greek banking crisis happened and pretty much reversed the trend of Bitcoin from down to up, and we've been going up ever since. In the middle of August, we finally got SegWit. Things are able to scale now. So it was really amazing how these dates kind of really correlated to two major events. I still think those two were the biggest events in Bitcoin over the last 3 years. The banking shutdown in Cyprus, and then finally passing SegWit, which was a huge struggle. And I usually talk about charts like this, and I have other seminars and a full-day seminars and some presentations where I educate people how to make charts and how to be a technical trader. Any traders in the room? Got one. All right, not a lot of traders. Okay, so these things may be a little confusing, but this is the price of Bitcoin going all the way down. Now, this is the Greek crisis right here. Now, I was expecting the price to fall all the way down to $110 on this way down. People used to hate me. I used to write articles saying, nope, it's going to keep going down because my technical analysis is telling me it's going to keep going down. But then it fell into my price where I wanted it to fall to, but it did it 6 months earlier because I was waiting for my day. I didn't know the Greeks were going to shut the banks down, but I wrote that article and I'm like, okay, so the price needs to bottom in June of 2015, but it bottomed in January of 2015. So if you go to my videos from this time period, I was a little confused on what's going to happen because I'm like, wow, this is more than enough. This is a huge low. It shouldn't go any lower, but it happened 6 months too early. So what do we do? Was I wrong on my date or was I wrong on the price? I thought I was wrong on the price and I was looking for lower prices. That didn't work out. But I believe this area here finally reversed Bitcoin for good. And after that, I started talking about how the price of Bitcoin is going to continue to go up. So these were my arrows. Every time I did this presentation, I draw another set of arrows. So I was doing good. This is a little low. This is only up to 4,000. Now we went to 5, and now we dropped to 3, and now we're back to 4. And we're flying kind of high. I kind of wanted us to stay in this channel, which is still pretty damn good. But now we're kind of high. Maybe we're going in slowly into that bubble territory. We will see, but I don't believe we're in a bubble quite yet. Here are some more recent charts, okay? And these are just some of my tweets and some of my predictions for the price of Bitcoin. So you can see how I expected us to bounce around this red line and then bust out and go higher. And right here, when the price was falling from 1150, this is, I believe this is very early in the year. I think this is the start of the year here. And yeah, because this is February, so this is probably January. And somebody tweeted out that, hey, this is a perfect buy at 900. And I replied, no, the 750 to 775 would be a perfect buy. But around 900, it's okay. So I said that right here. And I had this red line drawn. That's why I expected it to fall down to 750, 775 area. You can see that this line is right here, right above 755. We fell to exactly this zone. And then someone said right there, hey, getting close to 760, are you still going to sell everything and pile into Bitcoin? And my reply was, well, just mentally, I have no more cash. It's already all in Bitcoin. But if someone wants to buy some of my stuff, I'll gladly sell it to them for 760 price of Bitcoin. And then we bounced the next day. And these were some follow-up tweets where people were very happy that I called that one right. I didn't expect us to go this high. This is a January 3rd interview where I thought we would go up to $2,000 into my critical August date. And then I expected us to have some weakness into the end of the year, but we clearly went much higher. And you can see this green arrow, see that I had going up? And here's a more recent chart. And that's that green arrow right here. And and I drew this arrow like 4 or 5 months in advance, perfectly got covered, right? So that you can't even see the green arrow because the price of Bitcoin is right on top of it the whole time. That was really kind of cool. I then drew this line here at 3,000, and when we fell, see, it's the same pattern. Look, we go up. You don't know where the top is, but once the top is there, we fall down to the previous top. That's why there's a line. You go up, you struggle to cross the same line, you make a new high, and then if you're going to fall, my perfect buy point becomes the previous high. Then I expect us to struggle breaking the high. Once you break the high, you go up. I really thought this could have come down all the way here, but we got a little lucky. Then we bounced around this line, went up, and guess what happens when we fall? You fall right back to the line and go up, and now we're back to $4,000 around here, okay? And just the last handful of charts. This is recently. This is from August 16th. And again, these are just some of the patterns that I draw, some of the more advanced indicators for traders. Right here, I actually told people on live video right at $3,000 that, hey, you might want to take some profit. There might be some weakness. And then I suggested in other, on Twitter, over here, there was a short of Bitcoin. But then right here, I called for a buy, like a screaming buy right there at this candle at number 3. And oops, let me go back one. Back and back. So right at number 3, right in the very beginning, I said buy. And now then we hit $5,000. So I was right on that one. And down here, these were just some other ones. On this fall, I drew this arrow. And I said, hey, let's see what I said. As of today, Bitcoin on daily and weekly candles is a short. That means, sell it. Good luck, traders. Bitcoin is kind of dangerous to trade. Shorting Bitcoin is dangerous. And then I said, okay, it can rebound at any of these levels. This has a star on it, saying, hey, your perfect buy is right here at the star. And then a little later, I send out this tweet, hey, we're crashing. But right here, that's that star. Get ready. We can bounce this giant arrow right there. I explain why. And then here's what happened next. We went up and never really looked back. That was it right here. That's the arrow. We went up and we kept going up. And then I spotted this triangle and I tweeted this out in real time. Hey, we're about to jump to 3,500 right from 2,900. $600 move off of this textbook triangle. And you can see that's exactly what happened right there. Okay. And I think I have last one. This one is really recent. Essen, Germany. I tweeted this from Essen at the conference where right at the very bottom the other day at $3,000, and here's what I wrote. It's now or never for Bitcoin to bounce in my perfect buy zone of 2,950 to 3,000. Next level is way lower. So you really want to buy right here. And if you're wrong, you can either get out quick or rebuy way down there somewhere. And then Max Kaiser replied to me, a few hours later. Anyone know who Max Kaiser is? He's got his own show on RT. And that's what I found out about Bitcoin from this guy. So I kind of give him some respect. And back in 2011, 2012. And he has like, a million followers or something. And there you go. He thanked me because he was able to buy right in that zone. So I recommended, this is all public. You pay for the information you get. This is all free. I just do it for fun. So my YouTube channel is free. My Twitter is obviously free. So that's kind of what I do. I try to predict the price of Bitcoin, mostly because I enjoy it. And some people do reach out to me for consulting in order if they want to learn how to trade, though I prefer working with more senior traders and teach them some of the indicators that I'm more familiar with than they are. All right, so on that note, if there is time for Q&A, I can take a couple of questions. Otherwise,
2 minutes?
Sure. All right. So I hope the live stream worked. There were people watching. My battery is running low, which is perfect because they'll catch some of the Q&A and then it'll cut itself off. But all right, guys, fire away if you have any questions. But thank you for having me here. It was great.
So there was a list of the milestones, and the last milestone was this year. So what is the next then?
Oh, time-wise?
Yeah.
So I haven't published that article yet. They're pretty much like the milestones are approximately 2.15 years apart, but circular numbers are more important. So it's a pi-based system. So and I broke it down by quarters. So every 8.6 years is the big milestone. So the big one is coming in about 8.5 years, but smaller ones will come at 2-year increments. And then when it takes a while, now you're multiplying. Instead of dividing the number, you're multiplying. Like when Bitcoin is like, when you get a multiple of the 8 years, right? So like 54 years from inception will also be a really major milestone. So they kind of multiply on themselves. I'll publish an article. I have the list of dates for like the rest of the century. I just haven't gotten to right now.
What's your opinion on trading with leverage in crypto?
That's a really interesting question. Okay, so generally, trading with leverage is dangerous. Trading with leverage is dangerous. I've been an options trader. I'm still an options trader. I love options trading, but I'm a specialist at options trading. Futures trading is very leveraged. Currency trading is very leveraged, and it's very dangerous. You're going to lose all your money quick. It's the same in Bitcoin, but because Bitcoin markets are not regulated, and you can have that Bitcoin stolen or confiscated or hacked, leverage becomes very important in Bitcoin, mostly because you put less Bitcoin at risk of theft. So for that reason alone, I really do recommend leverage Bitcoin trading for only that reason. If your Bitcoin was not at risk by having your exchanges holding it, I would not recommend leverage trading at all. Because you get stopped out of the positions when things spike. Oh, wait, I forgot to thank KI for having me here. And thank you guys. Thank you for inviting me to speak in your office and at the event hosted by you guys. Any more questions? Sure.
So in your trading strategy, you're basically only focus on the financial aspects, right? So you're not looking for the underlying, why it may move. You only look for the charts, how they move, and you let's say you apply some financial techniques there that you've learned.
Yes.
I'm coming more from the technology side and want to understand want to get the technology into the game. I'm always wondering, there are a lot of coins out there, right?
Mm-hmm.
So, and if I'm, like you were talking about, there's a demand and a supply. I get the merchant side out of it. And I only look at the miners. So I don't mind, but I suppose that nowadays there are some coins that are better to mine than others.
Sure. Well, no, but that's not trading though, right? Like, from a trading perspective, there's two types of traders. There are fundamental traders and technical traders. I'm more of a technical trader. Now, fundamental traders, they do research, they find out what the stock is, how much money the company's making, how are they doing, and then they invest in those companies. Others piggyback on them and look for chart patterns. In Bitcoin, like I can't predict the news. I don't know that the Bitcoin or bad exchanges, right? Or when Bitcoin was forking, or what is the SEC going to decide on the ETF? But I don't need to, because I was telling you, well, look, you know that the SEC is making a decision if Bitcoin is going to have an ETF. I was saying in all my videos, there was I gave it a 5% chance that the SEC was going to approve Bitcoin ETF. And people were giving it, oh, it's 50-50, it's 50-50. And I said, no, it's 5%. So when the price of Bitcoin started rising like crazy into the announcement date, I was telling everyone, at this point, the expectations are so high that even if they approve the ETF, it's going to be a sell the news event. If they don't approve the ETF, it's going to be a crash event. That's exactly what happened. So you can see how things are reacting into known news, and you can certainly trade it properly. Same thing happened with the halving of the Bitcoin, of the mining. When it's halving, you know that the supply of Bitcoin is going to go down by half. So everyone is expecting the price of Bitcoin to go up. So everyone is buying Bitcoin into the halving. And I was saying even 6 months prior, well, the price of Bitcoin is going to go up into the halving. By the time the halving happens, all the buying would have already taken place. The halving is going to be like a sell event. It's going to be too late. That's also exactly what happened. So in case you guys are wondering if I trade Bitcoin, the answer is no. I actually don't trade it for 2 reasons. One, I really like my regulated assets, regulated markets where I know my money is safe. My Bitcoin is only safe with me. I don't consider my Bitcoin safe if I put it on any Bitcoin exchange. The other reason is I really enjoy doing analysis on price on things I don't actually trade. Things I do trade in the traditional markets, I don't talk about that at all. I completely separate, and I have videos and I talk about gold and oil and some of the other assets. I only talk about things I don't trade. This way I stay completely independent, and I'm not talking up my positions, and I'm not married to my position. I'm like, well, everyone sees that I'm short Bitcoin. I'm going to keep saying it until I'm right. This way I can change my mind quickly, and I can just look at a snapshot and then I can give my opinion. But I stick to the regulated markets for trading. But yeah, I'm not sure if that fully answers your question.
I thought so.
All right, let's go. I'm sorry, Ken over here, then we'll go there.
Seeing that you used to work for JP Morgan, what is your stance on the recent announcement by JP Morgan CEO that Bitcoin is a scam, and JP Morgan supposedly buying a dip somewhere in
So I actually I addressed that on one of my videos. I talked about it. So did he actually call it a scam? I don't remember. Fraud. Okay. So the way I say, so people have to realize, right? Like, I'm just a guy making YouTube videos. I'm busy all day long. I can only imagine the life of the CEO of JP Morgan, right? I mean, and they're expected to know everything when it comes to finance because they're looked up to. So you have a person that he can't just call in someone to explain Bitcoin to him. It doesn't work that way, right? He's expected to know it all, but he has no time to even look at it. So one thing is, you're busy. I mean, ask any CEO, right? Really, really busy. One thing. So he doesn't really know the details of Bitcoin. The other thing could be, he may know it. Look, Jamie Dimon is auditioning for his next job. His next job is either going to be the Treasury Secretary of the United States or the Federal Reserve Chairman of the United States, right? He can't exactly be standing there talking about how great Bitcoin is, right? So from a personal level, he's saying what he's supposed to say. His job is also to protect his clients and his customers. Bitcoin is still speculative. Bitcoin can go to zero tomorrow. Jamie Dimon is not wrong. I disagree with him, but he's not wrong. Okay? We don't know if Satoshi's going to show up tomorrow and sell 1 million coins and crash the market. We don't know if his private key can be hacked and someone else will do it, right? I mean, we just don't know. We don't know if there's a coordinated effort. Let's say most of the mining is happening in China. We don't know if there is a whole, coordinated effort to show up at every Chinese Bitcoin mine at the same time by the government and shut them all down, in which case your Bitcoin transaction might not process for like 5 days. If all of a sudden 50% of all mining power disappeared, it'll take a really long time to reset the system from the way the code is written. And also, people have been trying to, fork Bitcoin. We have Bcash now. I mean, I'd say 80% of the job by Bitcoin Core developers is preventing some kind of a Trojan horse inside the code of Bitcoin that would completely, annihilate it. So Jamie Dimon isn't necessarily wrong. Now, of course, I disagree. We all disagree. But from his perspective, that's his outlook. Now, as far as JP Morgan buying Bitcoin, that I debunked that news immediately once it came out. So there are a couple of Bitcoin ETFs already. One is GBTC, traded as a penny stock, even though it's like $5,000, but it's traded as a pink sheet penny stock in the New York exchanges. The other one is the Nordic, has an ETN. An ETN is slightly different, but it's a legal financial product. And you can purchase this ETN through your pension fund, through your trading fund, anything. And when regular people are buying into this ETN or ETF, the money has to get transferred for them to buy the product. And JP Morgan is one of those wire transfer companies. So when you saw that tweet that, oh my God, JP Morgan is buying all this Bitcoin, no, they're not. They're just moving money as a custodian on behalf of the people that happen to use them as a custodian to move their money. Okay? So I don't believe that JP Morgan or anybody in it is buying it for the bank. I don't believe that at all. It's possible, but highly unlikely. Nice. Next question. I was going to go back there. Yeah, yes, I had hand up earlier, I think. Yeah.
Just if you had to recommend one book on technical analysis, what would that be?
Oh, that's a good question. I don't. Like if I said I've never read a book, that wouldn't exactly be true, but it's close. I just don't like books. I read blogs, I read articles, and I love the internet. So I don't have any books I can recommend, but I can recommend a website called stockcharts.com, and they have this thing called Chart School as one of their links. And they just like go through it all one by one. And I've been really meaning on my website to put a lot of the links from other websites that are good. So I don't have a book to recommend, but there is an exam. You guys heard of like the CFA exam and the CPA exam. No, CPA is for accountants, CFA is for the finance guys. There's an exam called CMT, Chartered Market Technician. It's like a 3-part exam like the CPA, but for trading and charting. So if you go to the CMT exam website, I mean, I don't understand why people take that exam. I mean, either you know how to trade or you don't. I don't know why you need, proof that you learn how to trade. Just do it. But if you look at their curriculum and what books they recommend for the exam, it'll be what you're looking for. But I would just recommend Chart School on stockcharts.com. I got to do my basics of trading seminar here in Europe. I'm doing one in California. If anyone's in California in October, I'll be doing an all-day introduction to trading and going through what those charts mean and stuff.
As a follow-up, I'm just interested in your opinion on, because you don't trade crypto, right?
No.
Obviously, crypto trading is boom.
Yes.
So as sort of a means to financial independence, how would you compare crypto trading to all sorts of traditional trading?
I compare crypto trading to trading NASDAQ between 95 and 99. That's how I compare it. It's exactly the same. And I remember stories from back then. I was learning how to trade in '94, and the traders I was learning from world trading during that time. One of the reasons that really helped the dot-com crash was things like E-Trade and Scottrade and all of these online trading brokers came out, and now the average guy thought he was a trader. It's the same thing now with crypto. Now, instead of, at least back then, there was an age restriction that you have to be at least 18, and there was still like a $25,000 minimum to day trade. Now, every 12-year-old thinks they're a trader. In the ICO. That's not a joke, actually, because I have a 13-year-old that hits me up every now and then. He's been a trader for years. Right. So there's really no difference. It's now it's just like less regulation, and it's the same thing. Those traders were telling us, oh man, like in hindsight, it was kind of silly. These stocks were trading at $100 a share, and when the bubble crashed, we learned that it was just a fancy website and not a single developer. And they weren't doing anything except spending money. That's pretty much your average ICO. That's how I compare. Right. Okay, question here, then there.
Has anyone from the community or be it a large company ever tried to outdo your predictions by using machine learning, for example?
That's really hard. Like, trading bots don't really work. And here's the thing, right? So as far as I know, trading bots don't work. I'm sure those that work, nobody knows they exist. I mean, look, they like they say even on TV, it's like, well, the best way to get away with murder is not to tell anyone. It's pretty much the best thing. Same thing in trading. Like if you have a strategy that works, it'll work as long as you don't tell anyone. The moment you start telling people, strategy's not really going to work. So I have a strategy that I use for my trading, and I don't talk about it. And at the moment, I narrowed it down to 4 trades a year. I will make my trade. I will put all my money on a trade, and a week later, I will exit, and I will take my little bit of profit. So it's a strategy nobody else knows. Preferably, it doesn't look like anyone else is doing it. So you want to find those niches. As far as automating something, it's really, really difficult because even with my stuff, there's still a lot of intuition involved. And I'm working with a developer to try and code it together. And even if it works, it'll probably just be my money, his money, and a couple of our friends. I'm not going to open it to the world because the more money you put on it, the more people start looking at it and the weirder it gets. So a lot of these things only work on small scale. Even my strategy that I think is foolproof, it doesn't scale. Like there's a limit and it's not that high where it'll no longer work. So it's machine learning isn't there yet, and they're all going to be fighting each other anyway. So it'll be interesting. Yes.
In your introduction, you said, I think the good feeling was saying that the internet needs something to buy and sell things, right? Some currency, but then that would make like microtransactions or very small transactions, right? But then you said that Bitcoin is more like gold. Actually, that's something you invest your money in to be able to leave the country. Do you think it's both of it, or is it more one or more the other?
So Bitcoin has a chance to be all of them. Has a chance. As long as Bitcoin doesn't, I guess, compensate with the 2 most important properties. One being this permissionless value transfer, and the other one being censorship resistance. Okay? So as long as it doesn't compromise on those things, it can do both. But what people have to realize that you don't need Bitcoin for micropayments. We don't. We don't need Bitcoin for instant transactions. These are the things our current banking system can handle real well. I always say, look, your email got to you in seconds in 1997. I say 97 because that was when I first got like my Yahoo account. My first webmail was in 97 or 98. My email got to me instantly from person to person. So could have your money gotten to you instantly in fractions of a penny with micropayments, right? The banking system can more than handle that right now. The problem isn't technological. The problem is regulatory. This is where Bitcoin comes in by going around the regulation. But having micropayments, I mean, it's great. Bitcoin can do that now that we have SegWit and we can go to second layer solutions. But it's not a priority to me. It's a priority to some people. But like I said, it's doable. My phone plan is I pay through Google, and they charge me for data 1 penny at a time. I know some people think, well, penny is not really a micropayment. It needs to be sub-penny. They can charge me sub-penny at a time and round it at the end of the month. But they were charging me 1 penny per megabyte of data usage. So micropayments have always been possible. It's just that there wasn't that much of a need. Now that we have Bitcoin, maybe it becomes, a slightly bigger need.